Very good morning, participants. We welcome you to the 9th session of the Quality Cafe. We start with the opening remarks of Vishal Doshi, sir, who is the convener for the Center for Audit Quality. Sir, over to you, sir.
Thank you very much, Ruchika. Very good morning to all our participants and a very special morning to the Deputy Convener of the CAQ Directorate, Sri Priyaji, to our most respected and loved past president of ICI, Sri Amarjit Chopra sir, the other session speakers, Pankaj Tiwari ji and Sanjay Khemani ji. It's indeed a pleasure to welcome you on this Saturday morning on the Bank Branch Audit related Quality Cafe. So friends, as you are aware, this is the 9th session of the Quality Cafe that has been, I would say, live by the Center for Audit Quality. And this Quality Cafe are basically virtual series covering the qualitative aspects of the audits that we as chartered accountants do. And today's session, as I mentioned, a very important session on the qualitative aspect with respect to the Bank Branch Audit. Friends, well, I have been part of the Quality Cafes earlier, but this is the first time that I'm addressing everybody as a convener. And we have planned, I would say, a lot of activities in the directorate for the year 23-24. And especially, working around and spreading awareness with respect to the quality aspects of the audits. And I would say our first step in that direction was to come out with an Excel utility to help members with respect to the audit documentation and also the monitoring of the bank branch audits. That Excel utility was released day before by the Honorable President of ICI, the Vice President of ICI, and the council members at the council meeting. And later in this session, we will also demo and share that with the participants on how that can be helpful during the course of the branch audits. Friends, audit quality is something which is not just discussed and debated in India. I would say these are concerns and being discussed across the globe. And especially with the bank branch audits around the corner, we thought that this is the apt time to have a session on the quality considerations during the bank branch audits. The key quality considerations, in my view, when we talk of audit are, they includes the independence, the audit planning, audit documentation, maintenance of professional skepticism. And when we talk of the bank branch audit, especially considering the limited time that is available and the reliance of the IT system, the automated NPA provisioning, the management representation letters, the MOCs, multiple RBI circulars. And this is, I believe, what is the toolkit that as professionals we need to keep along with us. Friends, we have, I would say, a very eminent I would say panelist today, led by our past president, ICI, Sri Amarjit Chopra ji, who has experience of more than 35 years and was the president of the ICI during 2010-11. He has chaired several important committees that deal with the auditing and accounting standards, corporate governance, and banking at the national level, and also with respect to the IFAC, the CAPA, SAFA at the international level. I would say banking, finance, and insurance sector, and especially banking, because, sir, I remember that even in my student days, I've heard you as a faculty, as a speaker at the branch auditor seminars. And I would say still now, you are still one of the most sought after speakers when it comes to banking. And these areas, they interest in immensely, the banking, finance, and insurance. And, which can be evidenced by his nomination as independent director to the Indian Bank. He has also been a member of the SEBI Committee on Disclosures and Accounting Standards, the board member of the IRDAI, and also the member of the Audit Committee of the RBI. Besides that, sir is also nominated as independent director to several other companies in private and public sector. Chopra sir has contributed significantly to the professional development of the auditing and accountancy discipline in India over the years. And he is also our esteemed domain advisors in the areas of auditing, accountancy, and corporate governance in general, and banking financial and insurance sector in particular. So with these words, I introduce and welcome Chopra sir to this Quality Cafe session. Pankaj Tiwari ji is a fellow member of the institute and is currently involved in audit and assurance services, along with consultancy services like due diligence, valuation, etc. He handles audit under various GAAP, that is Ind AS, IFRS, US GAAP, IGAP of listed and unlisted companies in India. He is a member of the AASB study group on guidance note on audit of banks and the expert panel on the AASB bank audit. He has contributed in various publications related to statutory audit of bank branches, concurrent audit of bank branches, and is a regular speaker on India's Companies Act and other topics at various forums in India and overseas. So with these words, I introduce Pankaj Tiwari ji and also welcome him to this Quality Cafe session.
Thank you.
Sanjay Khemani ji is a practicing chartered accountant and a very senior partner with a reputed audit firm. He heads the BFSI practice of the firm since last more than 20 years and has been involved in providing assurance, taxation, risk consultancy, management consultancy services to large public sector as well as private sector entities in the BFSI sector. He has extensive experience of conducting forensic audits as well as special monitoring of large projects on behalf of lenders. Presently, he is serving on the board of directors of LIC Housing Finance Limited. Earlier, he was the chairman of the executive committee of the ARCIL for around 4 years, a premier asset reconstruction company set up by the SBI, ICICI, PNB, and IDBI, and also been the audit committee chairman of the ARCIL for 6 years. So with these words, I introduce Sanjay Khemani ji and also welcome him to this 9th session of the Quality Cafe. So without taking much time, I would now request first our past president, sir, to kindly give his views on the overall quality issues and with specific respect to the bank audits. Over to you, sir.
Thank you, Vishalji, and thanks for all your very kind and generous words. And of course, thanks to Sri Priya and Ruchika. And of course, greetings to Pankaj ji and Sanjay ji, with whom I think I'm sharing the forum for the first time in any of the webinars. You see, to me, bank branch audit has been something which on which the dependence of the profession is reducing every year, or is bound to reduce every year. I've been one of those leaders who have been saying it for the last 15 years or more, very frankly, and I've been exhorting the members that you reduce your dependence upon the bank branch audit. But today the talk is with regard to the quality of the audit. See, there are various aspects with regard to the quality of the audit. Number one, the bankers always tell the auditors, the branch auditors particularly, complete the audit in 3 days, 5 days, 7 days, 10 days. And I don't know for what reason. I think this is one reason where we have to attack and we have to actually focus on. Why our members keep on succumbing to that pressure that the audit has to be completed within a given time frame of 3 days or 5 days or 7 days. I've always maintained one thing, that once you are the branch auditor of a particular bank, nobody can touch you for a period of 4 years. Let's be very clear about it. But at the same time, if it's a small branch, take about 5 to 6 days time. If it's a medium-sized branch, take 7 days to 10 days time. If it's a bigger branch, take 10 to 12 days time. Heavens are not going to fall in under any circumstances. To me, one of the reasons for whatever quality, and we need quality improvement basically in the branch audit, is that we fail to gauge the character of the branch. We fail to understand the nature of the branch. I think SA 315 is very, very clear on one particular part, that you need to understand the various risks involved in the audit of a particular client. And how do you do that? If you understand the client very well. Now, if a particular branch is advance dominated, advance oriented, or it is deposit oriented, if it is advance oriented, the risk is different. And even within the advances, if it is fund based advance or it is a non-fund based advance, the risk is different for that matter. Within the advances, if it is a cash credit or advance, the risk is far more compared to the term loan advance, if you ask me. If it's a home loan advance dominated branch, the risk is lesser. If it's a vehicle loan dominated branch, the risk is of a slightly different nature. And if you are dealing with a rural branch, the risk is of a different nature because these are all agricultural advances, wherein probably the kind of automation which the Reserve Bank of India boasts of having introduced in the banks is a myth. It's a big myth. You start looking at the definition of the short-term crop or the long-term crop, and you can go to the various banks. And I definitely tell Vishalji and Sripriya, please tell the Reserve Bank of India the biggest myth that the Reserve Bank of India is living with is that NPA generation is through the system. NPA generation is through the system only based upon the fund operation, nothing, but not upon the non-fund based operations. I think Pankaj ji and Sanjay ji would agree with me that in the case of all public sector banks today, the records are not digitized. The stock returns which the borrowers file are not digitized. The balance sheets which the borrowers file are not digitized. The creditors' return or debtors' return which they file are not digitized. And if these are not digitized, these need to be audited only at the branch level. And the kind of returns which are filed by them, I think lesser they said, the better it is. The stock returns never tally with their balance sheets. The debtor statements never tally with their balance sheets. So who will check it? I think one of the qualitative aspects of the branch audit is that we have to tell the branch auditors that if you want to maintain the quality, particularly with regard to the cash credit accounts, please go back to the earlier years and check the stock returns with their balance sheets. And I can tell you in 90% of the cases, the stock returns will not tell you with their balance sheets under those circumstances. You will always find creditors to be 3 times and the stocks and debtors to be 50% or 60% of whatever they have been stated. And I want the institute to take it up with the Reserve Bank of India, somewhere or the other, that the quality suffers also because of the kind of manipulation which is being done in the system at the branch level with regard to feeding of the stock returns. And also with regard to, you can say the date of the renewal of a particular account. Because in the prudential norms, there are 2 things which are non-financial parameters. One, financial parameters, non-financial parameters with regard to the stock statements. If a stock statement is more than 6 months old and you allow the DP based upon that, the account has to be classified as NPA. Please go to the branches and find out. And I think every branch auditor must look at it. Go and find out how the stock returns have been fed into the system and what kind of dates have been fed into the system. And similarly, in respect of the renewal of the accounts, it very clearly says that if an account has not been renewed for a period of 180 days or more, in that particular case, the account will become NPA, irrespective of the operation of the account. Now, if the dates of the renewal of the account or review of the accounts are fallacious, I think what can be done about it? It's for the auditors to check and really bring out the kind of NPAs which exist in the banking industry as a consequence of that. And similarly, with regard to the agricultural advances, very frankly, I don't have a comment to be made. You look at the Kisan credit cards. When I talk of the quality of the audit, look at the Kisan credit cards. There are 2 entries which are passed at the end of the year. Cash received, cash paid on the same day. And if you try to find the entry in the cash scroll register, you may not be able to find the entry in the cash scroll register, or you may not even be able to find out the denomination of the notes which have come in. I think there are many aspects of this. And the kind of the way the term loans money has been diverted, I don't have the comments to be made. I think Reserve Bank of India has come down very heavily on some of the banks recently. And also they have changed many norms with regard to the restructuring being upgraded. Now they say that all facilities, there should be absolutely no irregularity in any account before the account is to be upgraded, very frankly. And not only that, I think one of the which is a very welcome change, that if you had account restructured earlier, after 1 year, the account could be upgraded. They say now, if even for a single day that account has been overdue, you cannot upgrade that particular account. Of course, in the case of MSMEs, they have said that this particular period is about 30 days, not 1 day. What one is trying to tell you is that branch auditors can do a far better job if they start looking at the files. If they only try to look at the operation of the account, I don't think that the branch audit can be conducted that way. If a branch auditor starts looking at the files of the borrowers, I think the quality of the audit can be improved tremendously. Of course, so far as the system generation is concerned, or looking at the systems is concerned, now the Reserve Bank of India says that at the end of every day, the branch has to undertake that particular operation of bringing out the SMA 0, SMA 1, SMA 2 accounts for that particular matter. So day-end operations have to be carried out and in all the branches. Now, whether that is happening or not, I think it's for the auditors to find out and then report wherever it is to be reported. The last thing that I would like to say, that under no circumstances it should happen that I am reporting something in the long form audit report which is contradictory to my main audit report. Long form audit report is only with regard to the systems. But if at all there is something affecting my provisioning, classification of a particular account, the status of a particular account, I cannot mention that in the long form audit report and can get away with that. I will have to bring it out in the main audit report. I can tell you there are a number of cases wherein with regard to the non-renewal of the account, people mention it in the long form audit report, don't give the MOCs. There are a number of cases where the people do report about the non-receipt of the stock statements for a period of 6 months, 1 year, 2 years, but they don't report it in the MOCs. I don't think that can go on. There's no way that the quality needs an improvement that. And particularly preparation of the long form audit report today is absolutely different from what it used to be 2 years back. Today, you cannot reply it in yes or no. Today, you have to reply giving the specifics basically with regard to the various accounts and the details with regard to each of the aspects. I think the Reserve Bank of India, in some cases, on certain aspects, has done a very good job. Now it is for us to really take it up. But one thing that I will like to say is that Institute will definitely have to take it up with the Reserve Bank of India, that the biggest myth that the Reserve Bank of India is living with is that every NPA is through the system. It's being generated through the system. It is not happening in virtually every branch. I can tell you that. And that is why the number of the auditable branches should not get reduced. That's where I will like to stop.
Thank you, Chopra sir, for your opening remarks. And like you have suggested, sir, we'll definitely take it up with the Reserve Bank of India about this myth that the NPAs, they are computed or generated, I would say, through the system. So it's, I would say, like, it's always a pleasure listening to you because it's not that you speak only out of experience, but you speak from the heart. And that is why people would always love to listen to you. And so another important point you made was with respect to the linking of the LFAR comments with the main audit report. That LFAR is not a standalone document, but it has its link. It has to be linked with the main audit report, and any adverse comment on remark in the LFAR has to be related with the opinion that the branch gives in the main audit report. So thank you once again, sir, for your opening remarks. Friends, I forgot to mention, but the session that we would have today is like the three experts. They would be giving the opening remarks initially. Then Sri Priya ji would be taking them through some questions where it would be like a panel discussion. Subsequent to that, we would have a short demo of the Excel utility that the CAQ has released. And then we will take up the questions from the participants and again, request the panelists to kindly respond to them. And as per the schedule, we would definitely close at 1 p.m. So with this, I would now invite Sanjay Khemani ji for his opening remarks on the bank branch audit and the audit quality.
Thank you, Vishal bhai. Honorable past President Sri Amarjit Singh ji Chopra, Honorable Council members Sri Priya ji, my fellow panelist, Pankaji, and dear friends. While Chopra ji has given a broad oversight of what is that which is lacking as far as the branch audit is concerned, and while enjoying the sentiment with Chopra ji, maybe I highlight few more things from my experience. Now, while there are issues in the quality of the branch audit, the fact cannot be denied, but at the same time, let me also acknowledge that there has been some of the branch auditors has been performing their job exceptionally well, which gives lot of input to the statutory central auditors when they are looking at the issues. And based on my own experience, at times branch auditors have been able to bring out the issues which statutory auditors at the statutory central auditors were never aware at the let us say head office of corporate central level, because lot of activities which are there which happens only at the branch which is not being subjected to the stat audit by the SCH. So to give an example, like Chopra ji touched upon the agricultural advances or the retail advances, whereas the SCH do visit large branches which predominantly have the corporate advances. So they do bring out lot of issues which is improves the overall reporting standards of the bank. So their contribution cannot be undermined. At the same time, there has been substantial gap in the expectation which the bank has, bank's management has, the SCH has, and there all of us aware the type of quality issues which we have been facing. Now, how what type of issues which we do come across as a central auditors when we review the branch auditors report? So while we do recognize that they have certain limitations within which they are supposed to be operating, and one of the limitations has been very well highlighted by Chopra ji, that time constraint, and he has also given a solution how we are supposed to be looking at that. And just for the information of the members, RBI has come out with this one letter way back, maybe almost 10 years back, asking the banks not to pressurize the auditors and to give them the minimum 3 weeks period for completing the branch audits. So that's something, that letter is there, but that is something more in theory. In practice, that's not which is being followed. Now, the issues which we do come across in the branch audit, so as Chopra ji also has mentioned, when the risk of material misstatement or the identifying the risk which is relevant to a particular branch. So the general focus has been that if I have looked at as NPA, then that's something which all pervasive. I don't have to look at anything else. The risk which in the bank branch audit has been increasing, particularly in the PSU setup, where all the activities still do take place at the branch. So starting with, let us say, your foreign remittances, or the KYC. So there are a lot of activities which are supposed to be carried out at the branch, which we find, and that's where auditors, I mean the CA's expectation is also from the branch auditors that they will be able to bring out those issues. So the deficiencies in the systems relating to the KYC, or deficiencies in the system relating to capital adequacy. Now, two things which is definitely affecting if it's an advances related branch is, one is the NPA, second is capital adequacy. That's something which I would consider one of the most important factors for a bank branch audit, which is heavily on the advances side. I'm not talking about the branch which is more on the deposit side. Now, while the system may be doing the audit on a centralized, I mean the NP identification may be there on a central basis. Chopra ji has highlighted pitfalls of that. I don't want to get into that. All that I'm saying is that the system identification would take place based on the data which has been captured in the system, and the capturing of the data do take place at the branch level. So to give an example, if an account is to be identified as NPA based on no credits in the account for the, let us say, during the last 3 months, or the credits not being sufficient to service the interest, can this be done through the system? Yes, it can be done through the system. But the stock statement, what was the last date on which the stock statement has been received, whether the stock statement has actually been received. The renewal date of this is something which is there in or not. So basically, all financial parameters can definitely be verified and done through the system, but what cannot be verified maybe centrally is something which is non-financial parameters, one of which we just discussed. So what has been found out is that there has been instances where the large value advances, when the central auditors picks up as a part of their sampling methodology, the advances which may have been classified as NPA, branch has not been classifying those accounts as an NPA. And at times, as the Chopra ji also has mentioned, that the branch will pressurize the management would pressurize the branch auditors to report all these issues in the LFR rather than in the man report. So I think the Chopra ji has already guided that we should not fall prey to that. If something which is required to be classified as NPA need to be classified as NPA, so that there cannot be two opinion on that. Second area of the quality which can impact the bank's reporting framework mainly is on the capital adequacy. Now, whether a particular loan is guaranteed by the government or whether a particular loan is covered by CGTMSE, or whether it is covered by CGFMU, that's something which has to be seen only from at the branch level, looking at the documents. Now, if that flagging of that particular loan is not correctly done in the system, obviously the system at the head office will consider this as let us say an account which is not covered under the CGTMSE, but it has been flagged wrongly as covered by the CGTMSE. It will get classified to the extent of the guarantee as a 0% risk weight as against the normal 100% risk weight that loan could have carried. Now, these kind of observations do come across when SCAs are looking at the central level. Another area of focus which a regulator also has, and where there are some quality issues have been observed at the branches level, is on the basis of the PSL classification. PSL again depends on it can be, while the system can identify the PSL or non-PSL based on the parameters which is available in their CBS, but the data which is there, the backup data which is there in the CBS is something which is available at the branch. So the branch auditors have added responsibility to ensure that the data which has been fed relating to the PSL. So there has been instances where all gold loans has got classified into the PSL. Now, gold loans which has been given for certain specific purpose can only be considered, not all of them can be considered. Similarly, just because the loan which has been given, just to give an example, a tractor loan need not necessarily be a loan to be classified as agriculture purpose unless it is being used for the cannot be classified as PSL unless it is used for the agriculture purposes. So these kind of issues which are being observed in the audit of the branches. Coming back to the LFAR and some certification part. Now, LFAR also, while the format as Chopra ji has said has got modified 2 years back, I think there are a lot of things which is still required to be done, and from the SCA's perspective, the way the SCAs are looking at it is in a qualitative comments on a particular aspect rather than a boilerplate kind of comment coming out of the question. So that's something I think in LFR we need to be spending a lot more time considering the importance which is being given to the regulator also on the issues which are being reported on the LFR. And on the certification part, particularly certifications relating to our, let us say, DICGC returns what we have, or interest subvention returns it has. All these has implications where these certificates are to be given to the outside parties. So I think we as a branch auditors, because while some of us may be working as an SCA, we also work as a branch auditor. So that if I have to say that the branch audit is something which is in a foundation stone of a bank audit, because everything gets consolidated based on the branch audit. So that's something which all of us, I think, need to be looking at very carefully, and try to address those issues by taking up sufficient time, which Chopra ji has already highlighted. With this, I think I'll stop here, and I'll request maybe to the next speaker, or maybe I leave. I give it to Vishal ji. Thank you.
Yeah, thank you, Sanjay bhai, for those inputs, especially with respect to the capital adequacy and qualitatively, especially because these are some of the areas, because when we look at the branch audit, and what experience says is that the auditors just go through the numbers that are generated from the system and all, but the background about the qualitative aspect on the capital adequacy and the documents and the verification that you have covered will definitely be helpful for the members in improving the audit quality. Now I would request Pankaj ji to please share his opening remarks on the quality considerations with respect to the bank branch audit.
So thank you, Vishal ji, and Honorable Past President Amarjit sir, Sanjay Khemani sir, Shripriya madam, and Vishal sir and Ruchika. So, it is always difficult after two eminent speakers have spoken a lot on the bank audit to add that what is left out from here. However, I'll try to cover some of the aspects. So quality on any audit appears in two places: the quality of our audit, that means the delivery to the bank, and also the quality of audit documentation, what we are creating for those audit procedures which we have performed. And the any quality, Sanjay bhai mentioned very rightly that the importance of the statutory branch auditor are as important as the central statutory auditor. Just to give you an example, the biggest public sector bank in India, which is there, around 42% of the asset size of that bank is audited by the statutory bank branch auditor as per their published financial statement. So and let's come to the quality of the audit. The quality of the audit depends upon what is the type of audit procedure we have performed. Chopra sir briefly mentioned about the risk assessment procedure which we have carried out in that audit. And the last is the level of professional skepticism which we have used during the audit. All these three put together determines the quality of the audit which you are delivering it to the bank. Now, typically, if I come to the statutory branch audit and what are the various quality issues which are there in that statutory branch audit, let me tell you, my friends, one of the issue which is very important and pertinent to note at the statutory branch audit is entries which are passed in the office accounts. Many times, office accounts are completely neglected or are not analyzed from the angle which it should have been analyzed, the importance which should have been given. There could be multiple reasons for it. Either the data is not available in the branch, or the information is not provided to us on the timely basis. However, all these facts, because these are one of the fraud-prone areas in the bank, the office account, the unauthorized use of the office account. So as an auditor, we should be vigilant that what are the nature of entries which are getting passed in these office accounts. Second point, which I would like to touch upon, the restructured advances. Briefly, it was mentioned that as compared to any other NPA account, my friends, the restructuring is one of the most stringent conditions for an upgrade. And not only from the upgradation perspective, but also from a downgradation perspective. If I look at the COVID circular, etc., in certain cases, the date of NPA has to go back to the original date of implementation or the original default date. Now, whether this can be automated may not be possible. Now, these all need to be factored at the branch level or need to be analyzed at the branch level. And just to give you all a perspective that the divergence which has been observed by the RBI in the recent past are not from these traditional areas, what we used to look at it, let's suppose the drawing power computation, the stock updation. The lot of divergence are coming from these restructured advances, whether the RP has been not implemented correctly or the date of the NPA has not been captured correctly, so on and so forth. That's the second area. The third area is that in the LFAR, when the LFAR got revised, there was a concept which was put in the LFAR is a quick mortality account. Now, as a branch auditor, we also need to look at the mortality account. Now, should we just stop at reporting giving a list of those quick mortality account, or just go beyond the reporting aspect, whether such kind of incidences or such kind of instances are present in other cases, which sooner or later may shift to the NPA. And that's why it is important for us to see that from the lens of the professional skepticism, that whether these kind of instances are present in other cases as well. For example, whether the quick mortality accounts which are going into the current year, whether it has been sanctioned by the same branch manager who might have got transferred, whether it has been evaluated by the same valuer, same legal authority, so on and so forth. The other important point which I would like to touch upon is that analysis of the cases where the rating has been downgraded. It is very important for us to analyze those cases, that what is the reason for the rating downgrade of those cases, and whether there is an increased risk of the credit. Some day or the other, these accounts might turn into the NPAs. Other important point which I think we as a statutory branch auditor should be looking at it, that and Chopra sir also mentioned in his opening remarks, that it's a myth that the NPAs have been automated. But as an auditor, are we reporting on these aspects in the LFAR? Because if you look at the reporting under the LFAR, it has still remained a short answer question. It has not been taken literally in the long form audit report. It's a long form audit report. The answer should also be a descriptive along with the instances if there are any issues which have been observed. Critical areas in the LFAR are reported on the basis of an inquiry or on the basis of a management representation, etc. And the other point which I think as a branch auditor, one should be very careful about the recoveries of these government guaranteed accounts, which Sanjay Bhai was briefly touching. Like, for example, now many of the accounts are of ECLGS might turn into an NPA in the current year because the moratorium gets over, interest servicing may or may not happen. Now, if you are recovering these guarantees, the amounts from these guarantee companies, whether they have been treated as a part of upgrade or whether they have been considered as a a recovery for the upgradation of the account. I mean, these are few issues which one has to look from the quality of the audit perspective. Now, if one or two instances on the quality of documentation, this has been time and again highlighted by the quality review board of the institute, that some of the where the files have been reviewed, the analytical procedure which is performed by the branch auditor is not documented. The materiality which is used as the basic document in any branch audit has not been documented. There is no documentation for restructured account verification, that I have verified the restructurer, I have verified the compliances of the restructuring. So from my angle, the quality persists in two ways. The quality persists, or the quality exists in what is the delivery to the bank. Also, what is our quality of audit documentation? I think both have to go in sense, and both are interlinked. If the quality of the audit procedure is as per the standard auditing, the audit documentation also need to be as per the standard auditing. So that's all as an opening remark from my side, Vishal. Over to you.
Thank you, Pankaj Bhai. What I understand, Pankaj Bhai has covered office accounts, restructured accounts, quick mortality accounts, the downgrading of rating, and so. If I summarize the opening remarks of all the three experts, I think if the branch auditors are able to cover all of those that they have pointed out, the quality would automatically increase. That is the level of expertise that has been shared. And I am very happy to share that we have more than 1,500 participants who have joined online for this quality cafe, which is the highest so far. But here we are not into I would say creating records, but here we are into improving the audit quality, and I believe that the participation itself would be give a lot of positives to not only the experts, to all of us also, that yes, we are concerned about increasing or improving our audit quality. And with the deliberations that have happened, I think it will go a long way, definitely in improving the audit quality. And with this, I would now request Sri Priya Kumarji, the Deputy Convener, to kindly take this session forward for the panel discussion.
You are on mute.
You're on mute, Sri Priya ji.
Thank you, sir. And to Vishalji, who's, I must say, in his first week outperformed as the convener of this group. We were able to come up with a bank audit utility very, very quickly. And I'm told in just a day of its launch, we've had about 1,500 downloads, which Ruchika will explain later. To the CA Amarjit Chopra sir, who I continuously follow in terms of both his writings and the places where he speaks. And he's been very consistent in one aspect, which is that the quality of this profession needs to be enhanced and maintained at the best level. To Sanjay Kamani ji and to Pankaj Tiwari ji, whom I have had the pleasure and privilege of meeting today, and of course Ruchika, thanks for all the effort. Here's a very hearty good morning to all of you, and welcome to this Audit Quality Cafe on Bank Branch Audits. I think the times have changed. There's a significant change in perception vis-a-vis the auditing profession. And if you compare it to the days gone by to the days now, there's been a dramatic change in how we are perceived as individuals or as an institution. Way back when we were created in 1949 to until maybe just a decade back or so, there was always an aura around an auditor. So we were sort of slightly above the general management and the rest of the stakeholders. But today it's not so. We've come under as much scrutiny as the other stakeholders. And there is a huge perception gap between what we are expected to do as per our act of creation, which is the 1949 Act, versus what the market thinks we should be doing. And in all this, I think if there's one engagement as statutory auditors, which is extremely important, if there's one engagement as statutory auditors, which is in consistent focus, that's been the bank audits. The bank audits for two important reasons. One, or perhaps a few more important reasons. One, I think it's perhaps the largest body of public interest that we audit as a profession. And two, the audit is performed on a standard template. It's common across branches, public sector banks, etc. So the approach to audit, etc. is the same. And a third important thing why bank audits are extremely important from a quality perspective and what the challenges in a bank audit are emerge from the fact that in a bank branch audit, you have no cake. So what's cake? It's cumulative audit knowledge. When you're auditing a client for whom, let's say a company under the Companies Act, you have a 5-year period, you have a time to sink in, you have an interim, you have an assessment period, you have a lot more time and a lot more cumulative knowledge that you accumulate about a client. Whereas in a bank branch audit, you're expected to hit the ground running. Whether it's 10 days, 14 days, and as Chopra ji rightly mentioned, I think it's important not to feel threatened by the time. Because I think that threat itself could be an independence threat. If you keep on telling yourself, I have to finish this in 3 days because somebody is wanting me to finish in 3 days, I think it impacts one's independence, efficiency, effectiveness, everything in an audit process. With this context, I'd like to now throw the floor open to questions on the bank branch audit. And thank you once again to the panelists for being here. Sir, this is to Chopra, sir. So the audit program is more or less like the most important beginning for a bank branch audit. The standards have consistently said that we need to deliver, we need to create and deliver as per a program. In this context, what would you think should be the key considerations in chalking out an audit program for a bank branch audit? And how do you actually tailor it to the needs of a branch? In specifically the context that I had raised, that you get to the branch on day 1 and you're expected to be out of the branch, let's say by day 15, and there are thousands of files to be reviewed. So your key considerations in designing an audit program for a bank branch audit.
Sri Priya, I think this is one of those questions which Pankaj ji talked of. He talked of documentation, basically. No audit program you can develop without knowing the nature of the branch or character of the branch, very frankly. And to me, I have always believed one thing, that no audit program can be fixed. It cannot be rigid. It has to be flexible. If I give my audit program, even if I have not determined the nature of the branch, whether it is deposit oriented or it is, you can say, advance oriented. If it is deposit oriented, even there, I will have to find out whether it is current account dominated, saving bank dominated, fixed deposit dominated. Because if it is current account dominated, then I have no risk of interest payment basically to be calculated. If it's saving bank account dominated, in that particular case, one of the risks could be that whether at any point of time the saving bank account has been overdrawn or not. So that will figure as one of the audit program points, definitely somewhere or the other, that I will like to say. And if it is a fixed deposit oriented branch, in that particular case, in any case, one thing will be with regard to, you can say the maturity, and if at all there is you can say maturity before the period which the person has been able to take. One of the points could be whether the interest calculation which was to be done, whether it was correct or not. And if any loans have been given against those fixed deposits, whether the lien was marked as per the procedure which was there, which has been laid down as per the policy of the bank for that matter. And then the TDS on the interest, whereas TDS in the case of the saving bank may not be the issue basically, but the TDS on fixed deposit could be one of the issues. And I have been saying in many seminars, and this is again a point of the long form audit report versus the main audit report for that matter. And I will definitely like Sanjay ji and Pankaj to comment upon that if at all they have any. I find some of the long form audit reports when I was the CSA, that people will mention that interest has not, the tax at source has not been deducted from the interest paid on the fixed deposits. But when it comes to the main audit report, where it has been mentioned very clearly that the tax provision has been calculated at the head office and the bonus provision has been calculated at the head office. Now, if the TDS has not been deducted from the interest, whether that expense is allowable or not, whether as a branch auditor I should bring it out for the benefit of the central statutory auditor that the tax provision has to go up as a consequence of this. So I think depending upon the nature of the branch, my entire checking will, my entire audit program gets drafted or redrafted for that matter. And I will definitely, I have been telling my staff at least, that most of my program is to be based upon the long form audit report. If you ask me, the audit program has to be drafted based upon the long form audit report. The long form audit report has got the kind of questions which covers the entire thing so far as the branch is concerned. You have nothing left. Very frankly, if you follow long form audit report, that becomes an audit program in itself. If you really ask in the case of the bank branch audit, there is no question which remains unanswered. But in the audit program of a branch, people ignore at least one report altogether, and that is the Ghosh-Jilani committee report. People just don't look at it at all as a part of the audit program. No, Ghosh-Jilani committee report is one report which says that whether the systems, the control systems within the branch are foolproof. And if I really look at that report and if I have answered all those in positive, in that particular case, no fraud can be committed in a branch. Now I will read out one of the questions. One of the questions says whether there has been a rotation of the seats or not in the, particularly with regard to the sensitive seats. And I think even the branch where Nirav Modi fraud had been committed, the auditor would have said, yes, the seat rotation has taken place. Whereas that person continued to sit on that seat for 8 years, very frankly. And Nirav Modi fraud happened only because of that particular reason. Now, Ghosh-Jilani committee reports certain questions cannot be answered by me in yes or no. There is no way that I can answer those questions. Believe me. Absolutely no way that I can answer those questions. Now, that some of those questions I must read before going to the branch, and those questions must form part of my audit program under all circumstances. Now, one of the questions is whether all the checkbooks have been issued based upon the requisition slip or any checkbooks have been issued based upon the plain paper. I think there are good number of the checkbooks which have been issued based upon the plain paper requests. Whereas I continue to mention, no, these have been made based upon the requisitions. I don't think that's the right kind of an answer. There is a question that when a customer enters the branch, whether he first goes to the may I help you counter or goes to the cashier and engages him in conversation. I think Whether I can answer that question, my answer is no. There is no way that I can answer that question. There is a question whether the server room, where the servers are there, whether that has been absolutely securitized in the sense that there is proper security. But if I, as an auditor, I go during the lunchtime, people are actually taking lunch in that server room, but I keep on mentioning that no, that's absolutely secure. What I am trying to say is, long form audit report, the format of the main report, and the Ghosh-Gilani committee report. And if at all, there are other certificates also to be given by me. And I think Sanjay ji talked of CAR for that matter. I think CAR is one of the totally ignored areas. If you look at the LCs, you look at the bank guarantees, I keep on telling people that show it as a contingent liability. Now, if some of the guarantees have already vanished, have already expired, if some of the LCs are no more there, why should these continue to be shown as contingent liability? It affects my capital adequacy ratio adversely. That should be a point for your audit program for that particular matter. So what I am trying to say is that in the audit program, depending upon the nature of the branch, depending upon the report that you are supposed to give, particularly in the long form audit report, there are questions with regard to the sanction, there are questions with regard to the credit rating, there are some questions with regard to the credit dispersal, there are questions with regard to the monitoring of the account, the stock returns, everything. There are questions. I think those become the part of your audit program under all circumstances. But under no circumstances you have to tell your staff that this is a tick approach. No. The person goes with an audit program, but if at all he has to modify his audit program depending upon the need, I think he should be allowed to modify that particular audit program. That is a must under all circumstances. That's what I have been always telling my staff, that the audit program is there, but you modify the way you want it to be done when you go to the branch. Because if I give you a rigid audit program, it is this quality under all circumstances is going to suffer. If one of my persons feels that probably whatever figures are being given as I can quote you one of the examples. In one of the rice shelling units, what one could find out compared to the last balance sheet was that suddenly the unsecured loans have gone up. Now, when the unsecured loans have gone up, now if I tell him that you have this fixed approach only, I've told him no fixed approach. Let's be very clear. You do the way you want to do it. And what he did was a marvelous job out of it. When he looked at it, that unsecured loans are there this year, but there is no cash which has come in. After all, cash has to come in the cash credit account or in the bank somewhere. After all, some funds have to come. And when he compared with the last balance sheet, and he came to a conclusion that the creditors had become very heavy and the creditors have been shifted to the unsecured loans, otherwise the DP would not have been available. The drive power would not have been available. All are these things where you have to allow a free hand to your staff to do the work in a manner that he's supposed to do to render a far better qualitative job. I think I will like to stop here. You are on mute, Sripriya.
Yes, sir. If I were to just summarize in terms of what you spoke now. So the first thing that emerges is that the audit plan is not a fixed plan.
Yeah.
Two, the LFAR by itself is good enough if one follows it in letter and spirit. But the LFAR questions are fairly large in terms of, I wouldn't use the term large, but they're broad questions, which is why you need an audit program to actually deliver the answers to those broad questions, which are categorized under sanctioning, disbursement, post-disbursement monitoring, etc. Third, what would be ideal is a top-down approach. You first need to understand the branch. Is it a deposit branch or an advance branch? Starting from an advance branch, you need to identify what are the top categories of advances. And thereafter, for each advance, you apply the relevant checks and balances. That's the fourth thing that you said. And the fifth thing that you also said is it's not just important to follow a tick box approach. Okay, is an application there? Is it filled? Is it signed? Etc. etc. But one actually needs to go one or multiple layers lower, such as the illustrations which you pointed out. The most important thing being, for example, if somebody is given a stock and book debt statement, and there is no aging of receivables, and everything is shown as less than 1 month or 2 months old, then one has to look at the cash credit account to see whether that kind of money is coming in.
Can I just interject at this particular moment? See, one of the points which one of my senior partners always will tell the juniors is that when you look at the cash credit account, look at the turnover in that particular account. If the limit is 3 crores, then the credits have to be far more than the 3 crores. Limits, then it cannot be only 3 crores basically. Because normally the working capital must turn over by a period of 3 times to 4. No. And if it is less than 3 times, you can say that this account is going to go somewhere else. Similarly, the current ratio in a cash credit account. If the current ratio is falling below 1, you have a matter of concern. Then you should be looking at that particular account far more carefully than what you have been looking at it. So that is why I say there cannot be any tick mark approach, basically.
Yes.
When you go through a particular operation in a particular account, now in cash credit account, one has come across number of cases. I think Sanjay and Pawan would bear me out, where there are only 8 entries in a cash credit account. Every quarter there is interest debited, interest received, interest debited, interest received. Now cash credit account is not meant for a permanent account. It is meant for business operations basically. And if you are using it, that once you took the particular amount and after that you are not even using it for the business purposes, I think I have a reason to get into it where the money has actually gone. So that cannot be a tick mark approach basically.
Yes.
So
Thank you, sir.
to me, what is most important in any audit is you have to allow the freedom, and professional skepticism is one part. I think the common sense, which is very uncommon, has to be used by every auditor in as much abundance as possible.
Yes, sir. Thank you, sir. Thank you very much, sir. And this is a question for Mr. Sanjay Kemani. So there are broadly compliance procedures, substantive procedures, and analytical review procedures. So is it appropriate to first start the bank audit with analytical procedures? Can you just tell us where all would you apply? First of all, the first question is, do you start with analytical procedures in a top-down approach? 2, can you give us some practical illustrations of analytical procedures and how they would flow into audit program definition?
Yeah, sure, Sitwell. So, do we start with the analytical procedure? My take is no, we just don't start with the analytical procedure. I presume that before that we need to identify the risk of material misstatement, what can go wrong in the branch depending on the type of the branch which we are handling. Now, having identified what is the risk of material misstatement in a particular branch, do we do that analytical procedure? Surely we do the analytical procedure. And how do we do that? So that's a challenge which the branch auditors should have in a branch, because lot of data is something which is centrally available, and that's not something which would be made available to the branch. But some of the data, like what we have been performing as an analytical procedure, I'll just give you an example of that. So every bank has as a part of their EOD process or the year-end process, lot of reports which gets generated from the system. So if it is an advance related branch which you have, you can either, if the bank is able to provide us the dump of the, let us say, your loan account wise detail, then what we can look at is an outliers in that particular areas. If you have an, let us say, home loan branch and you have an interest rate which is available, then you look at, okay, which are the ones which are outliers in that, and that can be used particularly for the purpose of selection of the sample. If let us say it is in a deposit related branch, so which are the branches, once we take the list of the depositor, account-wise depositors listing, Again, we need to analyze which are the deposits, which are, let us say, where the special rate of interest which has been given, which could be on account of staff deposit, could be on account of senior deposit, or could be, let us say, special rate which has been approved for a particular, on a particular day, or those kind of situations which are there in that. Now, if either we can do it by the use of the, if they give us the data, then we can definitely analyze it on our Excel, or depending on the data size, or Access, or Tableau, depending on what is the data size. If that is not something which is available, we can still scan through the reports which are made available as a part of the EOD and a part of the year-end process. Now, some of the issues which I will tell you, which we have come across during the course of analyzing this. So, while this is at an individual account level, so just to give an example, if the interest rate on the saving bank deposit is 3%, we do the analytical review. Okay, what is my interest on the savings bank account, which is the average balance which is there on the savings bank account. Now, would that give us some indication? If there is some issue in the computation of that, it will surely give us some indication. Same is the case when it comes to the, let us say, the interest income on the side. So what is my interest income on the product wise? So generally bank would have what is my interest income on the term loan, arrive at what is the average interest rate, interest income which I earned on the term loan, what has been the average balances, compare it with what is the level of NPA, because all interest, all loans are not interest bearing loans. So those kind of an analytical review can give us an overall assessment of what kind of a risk which is prevailing. Analytical review, of course, is not a substitute for the substantive procedure which we are supposed to be performing at the branch, and the whole purpose of the branch audit is to carry out the substantive testing. Because at the SCA level, one of the main role which SCA is supposed to be playing is doing the lot of analytical review, because that's where they have an aggregated data of the bank as a whole and access to the data which is available. So, should we do that? The answer is yes. How do we do that? I think I have already covered. What was the third question, Sri Priyaji, you asked? You asked me on 3. No, you are on mute, Sri Priyaji.
I'd asked you 2 questions, sir. One was, what do you perform first? Is it the analytical review? And then second is component-wise, what are the typical analytical procedures, which I think you have answered, sir?
I think I covered both of that. Does it answer the question?
Yes, it does. Yes, it does. And I think what you also mentioned was the use of analytical procedures, not just in terms of variance, but to identify outliers.
That's right.
Which brings us to another very important thing. I think knowing Excel is extremely important for the conduct of branch audits. So, for example, if you can create a huge loan balance file and then filter for housing loans and look at the rates of interest and, put some charts, etc., so you can figure out, variance and rates, etc. But for all that, of course, you'll do some basic testing on the file that the client gives. The loan balance file, you just... So very nice, sir. Thank you. Thank you very much. And this question, is Chopra ji there, sir, or he has moved out for the moment, but I can move it to Pankaj otherwise. Pankaj ji, what is your view on how...
I'm very much there.
Chopra ji, yes, sir. So how do you precisely select samples? Is it only based on materiality? Or is it based on materiality, diversity, and outlier?
See, let me put it that way. So far as the large advances are concerned, I have no choice at all. Large advances have been defined by the Reserve Bank of India in the long form audit report. And there, we are expected to do all large advances, basically, without fail. So there is no choice given by the Reserve Bank of India so far as the large advances, and that definition they have given. 10% of the total amount of the fund-based plus non-fund-based advances of the branch, or rupees 10 crore, whichever is less. So if you really ask me, this will not give me more than 10 accounts, 10 large advances account in any of the branches. Let me be very clear about it. 10 or 15. No, 10 or 15 accounts I can always do. There is no doubt about it. And then I will definitely combine materiality with the diversity. There is no doubt. I will definitely like to cover the vehicle loans also. I will like to cover agricultural loans also, depending upon the nature of the branch. Home loans also, the cash credit also, the term loans also, whichever is left so far as the smaller loans are concerned. But so far as the large advances are concerned, there is no choice with me at all as per the Reserve Bank of India. And Reserve Bank of India asked me in the long form audit report to give the names of the account numbers, and the kind of checking that I have done. So where is the choice? There is no choice at all, if you ask me. And so far as the other advances are concerned, I'm very clear that I should be using the basically diversity also and the materiality also.
Sure, sir. And maybe one red flag is if you've requested for 100 files and they give you only 90 till the end of the audit. A lot of us seem to think, okay, we've done it adequately, so we'll move ahead. But I think the
no, I don't believe in that. I have one thing very clear in my life, that you issue him a letter. Now, if he gives me only 90 and does not allow me to check 10, come back. Don't hold on to your report. Put it in your report. Give a disclaimer with regard to that. Give the total amount of the loans which were not shown to you, with the details of which were not provided to you, and give a disclaimer with regard thereto. I think that should be the end of the matter. But I will not like to be blamed for holding on to the report and holding on to the consolidation at the head office level. That I am very clear.
Sure, sir. Sure, sir.
So, Sripiraji, can I add to what Chopra sir has said?
Please do, sir. Please do, sir.
So, while I fully agree with Chopra sir has said, so apart from this, what we also do, so apart from certification of the data in terms of the product type and all that, one of the area which we generally do is also the level of sanctioning authority, because the level of, let us say, the credit appraisal or the monitoring could be different for a different level of authority. So if let us say advance which is to be sanctioned at a particular level, let us say by a person who is in scale 2 or scale 3, the level of documentation may be different than the advance which is, let us say, sanctioned by a person within scale 6, or advance which is to be sanctioned by their credit committee or the board. So that also we do, we should select samples out of that, so that we also know the internal working and the documentation which the bank at a different level of hierarchy to maintain. So that's, I thought, maybe appropriate.
Sripiraji, in addition to, I think what Sanjay ji and Amarji sir rightly mentioned, one more factor when we are doing the sample or sampling is also to look at the areas which have been highlighted by the concurrent auditor or the internal auditor, and we can pick up the accounts from there also for our analysis purpose, include them in our samples. Because many a times, lot much information are gathered from these reports also. Even as part of the LFR, we are required to these reports. However, at the sampling stage also, these reports can be taken as a base, and those accounts can also be included in our samples.
Yes, sir. And I also think somewhere in our audit documentation, the sampling is critical to the audit process because it needs to be objective. So it's very important to also tell why in your own working papers, to document why you picked a particular file. And there, I think it's a very good thing that if I were to just condense everything, you can select based on materiality or because of a statutory compulsion, which is your 10% in large advances, or you can select for diversity, or you can select for outliers. And such outliers would include, public domain information about a particular client or about a particular manager, or it could be like in your case, any of the other audit reports. Yes, I think so. It's also nice to figure out how you're sampling and why you have sampled. So the next question again I have for Chopra ji. I understand he has to move on after some time. So and all the panelists are most welcome to participate. Reviewing internal control considerations at a branch level and identifying the risk of material misstatement is extremely important for audit quality, especially in the context that you have no cumulative knowledge and you have to do it quickly. I think it's an extremely critical audit document, again, from an audit quality perspective, to ensure that you followed a process which will result in a result. Sir, in your view, what should I document as an auditor in my ROM, risk of material misstatement, the approach? I mean, if you can just put some bullet points on what the ROM should definitely contain.
No, the misstate can be in respect of what? Let's first find it out. In respect of a branch audit. Misstatement can be in respect of the NPS. And if there is a misstatement in respect of NPS, then the revenue gets affected automatically. Let's be clear so far as that particular part is concerned. Because if you have not identified certain things as NPS, then naturally, as a consequence of that, the misstatement would continue to be there with regard to the revenue also, because you will keep on recognizing the revenue as well, so far as that those accounts are concerned. So first I have to eliminate that particular process, and I think as a part of my audit program, if my NPS statement is correct, in that particular case, there is hardly a chance of the material misstatement so far as the revenue is concerned. I think that's very important. The second thing that one will like to say is that as a part, I have to understand the prudential norms. Now, prudential norms are very clear that if at all there are certain accounts in which FITL have been created, funded interest on loans have been created. I am giving just examples basically. Now, in that particular case, a provision equivalent thereto has to be created with regard thereto, because FITL is nothing but the creation of or capitalization of the interest which was debited, which was unrealized basically. Normally we reverse that particular interest which is not realized, but here we have not actually reversed that particular interest. But what I'm supposed to do is that I should create 100%. So if my audit program is focusing on the FITL part also, and then I will be focusing on the provision part also, because that 100% provision has to be created against that. Then material misstatement cannot take place so far as that particular part is concerned. Material misstatement can take place in respect of the interest on deposits. Now here, I think Sanjay ji talked of certain analytical procedures, and I'm going to talk about that. Now, of course, the computerization has come in. Everything has come in. The IT systems have come in. Earlier, what used to happen was that they will debit the interest in respect of few ledgers, and in respect of the other few ledgers, they will not do it. Now, here what is more important is that in case of the premature fixed deposits, the terminated fixed deposits, or in respect of the wherever the interest changes take place, basically, on those days, whether the interest was fed correctly or it was not fed correctly into the system, that's very important to be seen. Because if the interest has actually risen on the fixed deposits, and I have not fed it on the date, or I have not value dated it correctly, basically, having fed that. I fed that into the system, but I didn't value date it correctly. Probably 1 month interest could be underbooked, or 2 months interest could be underbooked, depending upon whatever kind of misstatement has actually taken place, or the feeding of the interest rate that's taken place. So what is important for me is, as I said, I have to be very clear as to the areas in which the material misstatements can take place. And if I am able to plug those through the audit programs, then I think I have absolutely no risk so far as the material misstatement part is concerned. I have to cover myself up under all circumstances as an auditor with regard to the possible areas of the misstatements, and covering those possible areas of misstatement through the audit program. And if I have actually checked it correctly, and I can actually follow that particular process, then I can say that I have no risk so far the material misstatement is concerned. Now, there are ways and means in which the people have been taking it, particularly in respect of the interest reversal. Now, take the case of the interest reversal in the case of the NP account which I identified. Now, one of the points which is always there as a part of the audit program is that whether the unrealized amount of interest has been reversed or not. And if I say the account which was NPA and the amount of the interest has been reversed in that particular case, then the material misstatement would not take place so far as that particular part is also concerned. So those are the kind of things which we need to be very clear about. And so far as the overall rate of interest on the advances is concerned, that's fine. And so far as analytical procedures are concerned, I can tell you, when I used to sit on the board of the Bank of Baroda or Indian Bank, as an audit committee chairman, I would definitely compare the interest of the 2 quarters, average interest of the 2 quarters, and the average interest and average advance outstanding of the 2 quarters. And if I will find a material change therein or divergence therein, I will definitely get into that. And one of the points which was there in the long form audit report, and I think it continues to be there, is whether there are any divergences basically in the P&L item. Suppose your deposits have gone up, your interest has come down, or your advances have gone up, but your interest income has come down, or your deposits have come down, but your interest expense has gone up, or your advances have come down, but your interest income has gone up. I should be doing the checking in those cases. Firstly, through the analytical procedure, I will be able to know whether there are divergences. And if at all there are divergences, then I will do the deep dive into all those matters to eliminate the chances of any kind of material statements.
Thank you, sir. Thank you. So the next question is something that's been haunting me for a while. And this is to Sanjay ji. So there are again two general and a specific question here. So when does one have to do a memorandum of change? So unlike in the case of other clients who keep their books open, a bank is a financial system. So they close books on 31st. So everything else after the 31st value date can come only later as an MOC. Now, in the context of MOC, what are the key criteria, including materiality for an MOC? The second and a more specific question is, very often we find documentation or process challenges in files, the loan files reviewed by us. There has been a consistent slippage or a delay in renewal. There is some document not available. There is no debit credit summation in the account. And yet my bank manager insists that it's a good account. And classifying an account as an NPA it's a significant thing for both the bank as well as for the client. What are your views in this regard, sir? How do you deal with non-financial NPAs?
So the first question, Sri Priyaji, was on the MOCs. What are the key criteria for classifying, giving in an MOC? See, MOC, based on the audit instructions which is being received by the SCAs, the materiality is something which generally SCAs determine that below this level you should not report any kind of an MOC. Now, that's something which is generally determined by the SCA, but in case SCA has not determined the materiality for reporting on the MOC, then the materiality which the branch auditor has determined is something which is required to be considered while considering a particular MOC or not. Now, what are the key criteria for that? So obviously one is the materiality. Second, at times, while the amount may not be material, while the amount per se may not be material to the branch, but the nature of the error is such that it may turn out to be material for the bank as a whole, because the transaction or the type of business which a branch has may not be sufficient for that particular branch to come under that materiality threshold. But from the overall on the bank's perspective, it might become material. So that is something which also is to be considered for the purpose of determining whether a MOC is warranted or not. There are certain procedural deviations or the non-compliances, whether any MOC is warranted for that. The answer is clearly no, because MOC is only for something which is impacting the reported numbers in the financial statements, which could be on account of your balances in the profit and loss account, which could be on account of your balance sheet, could be on the NPA classification, could be on our sectoral classification, could be on our capital adequacy. So there are a host of areas where the reporting numbers are finally goes into the whole bank's balance sheet. So wherever there is something which is on the meet these two criteria, that is something which is required to be given. The second point I think you raised was what kind of documentation which you are supposed to be maintaining for these MOCs. Was that the question?
No, sir. Handling of non-technical MOCs.
Okay. So, non-technical means non-technical is what?
So I know that the unit is not doing well. There's
Okay.
a cash flow of 3-4 crores.
So you are basically saying that while you know that the account is not doing well, but it doesn't comes into the four corner of definition of NPA where it says it is overdrawn for continuously for a period of 90 days, those kind of a thing. But as a judgment of the auditor, in the judgment of the auditor, those accounts are bad. Now, whether the auditor can classify those accounts as an NPA and give the MOC, the answer is yes, it can. At the same time, the auditor also need to have the sound reason, because classification of the borrower not only impacts the bank, it also impacts the borrower as well, because it's this is something which is required to be reported to the CIBIL. So there has to be serious weaknesses in the conduct of the account. So there are few examples which has also been given by the RBI in their directions. So there is a solitary credit closer to the balance sheet days, while the account has been continuously being overdrawn. But on, let us say, closer to the 31st March, you have one credit or two credit because of which the account has come within the limit, and as a result, it doesn't fit into the criteria of continuously being overdrawn. Whether those accounts can be classified as NPA, the answer is clearly yes, and the MOC is required to be given. The challenge, Sri Priyaji, is that sometimes in such kind of an account, the branch management may not agree with the view what you have and may refuse to sign the MOC. If let us say if that is in a situation which is there, because MOC generally is to be signed by the branch management as well as the branch auditors. If let us say we are faced with such a situation, then the branch auditor is left with no option but to qualify in the main audit report that these are the MOCs which are there in his judgment. These accounts needs to be classified as NPA after giving the impact of that, of course, on the provisioning, then interest, what Chopraji talked about, reversal of the interest and all that. And that can be included as a part of audit report itself. I hope that answers the question you have.
Thank you, sir. Ruchika, where does one get to see the participant questions?
I've already shared it with you.
By mail, is it?
Yes.
Okay. No, the questions from the participants?
Yes, yes.
Okay.
Here only one thing, Sri Priya, whatever Sanjay said, I would like to just supplement it. And I would like to have your opinion and Vishal's opinion also on that, or Pankaj's. See, you talked of the MOC's materiality, basically, and Sanjay said that the central statutory auditors can define the materiality from their side and can deliver it to the branch audit. I have always been under a doubt on this particular point, whether as a central auditor I should define the materiality to a branch auditor, because branch auditor is dealing with a very different set of figures, basically. Now, for him, in a particular branch, say the advances are only 50 crores, whereas the central auditors are dealing with the advances of maybe 50,000 crores or 60,000 crores. Now, for him, out of 50 crores, maybe 1 crore could be material, or maybe 5 crore could be material for that matter. If the particular branch is showing a particular profit, say of 5 lakh rupees, and if there is a revenue leakage or revenue recovery to the extent of 10 lakh rupees, for him even 10 lakh could be material actually from the viewpoint of his financial statements. Should that not be the case, then it is for the statutory auditor. Let the branch auditor give the MOC. It is for the statutory auditor to find out, central statutory auditor, when he is dealing with the MOC, what kind of MOCs he wants to take or he doesn't want to take. That's a different matter. But from the, and it is always possible that different auditors are giving different MOCs, maybe with regard to the revenue, maybe with regard to the NPA level. And if the consolidated effect of that becomes material enough for the central auditor, then what happens? I think To me, it will be more important to leave the materiality levels to be determined at the branch level by the branch auditors. And then the central auditor must look at the consolidated impact of those MOCs, the total MOCs given by the branch auditors, whether it affects his view or not. That's a different matter. And if it does not, let him ignore it. But if those affect that particular case, he might have to. Now, you take a case where in a particular branch, the rent has been booked only for 10 months instead of 12 months. I think the branch auditor must say it, that it has been done that way. Now, the central auditor may say, okay, we'll book it in the next year. That's a different matter. We'll take the impact in the next year. No issue on that. But the branch auditor cannot ignore that particular part, because tomorrow somebody files a complaint against him that this poor fellow will be hauled up for no reason or right. So having sat in this disciplinary committee for almost 6 years, 2 years earlier, 3 years earlier, and 4 years now consecutively, I personally feel we should not expose our branch auditors to any kind of risk so far this part is concerned. Let him determine his materiality level and then issue the reports accordingly. And then let the central auditor determine what is his materiality level and whether he wants to take cognizance of the total MOCs or not. That we should leave to.
Yes, sir. And so this question is for Sanjay ji from the audience. Stock statements and financial data of borrowers are not produced by banks in a number of cases. Can we declare the account to be an NPA in that situation where the bank knowingly did not obtain or provide the data?
So if the stock statement is not available, Sri Priyaji, the regulation is very clear, because then you can't be granting the drawing power. Now, if there is no drawing power, obviously the account would become NPA in any case within 90 days. So the very basis of granting the drawing power is the availability of the stock statement. So the question of the branch does not provide or not recognizing that, not classifying that does not arise. It has to be done because that's very clearly laid out in the regulation.
So let me just extrapolate this, sir. Bank, they are also required to submit periodic stock statements, correct?
Yeah.
So let's say my account got renewed in May 2022.
Yeah.
I'm auditing in March 2023. After May, there is not a single stock statement, especially because of this new CARO requirement and the audit reporting requirement that it has to match with the financials. So somebody has decided he's unable to provide it. How do I treat it?
So that's what I said. That's precisely I said that stock statement, because it is not there since May 22 and we are in March 22, stock statement, if it is not submitted for 6 months, the account would become NPA.
NPA automatically.
Automatically.
And here
the auditor has no choice. The auditor has no choice. Absolutely no choice.
And not only Shri Priya, it will become an NPA now. It should go back to the date when he stops submitting the.
Yeah, obviously.
Yeah.
Reverse the interest from that date.
Absolutely.
So that's another important point.
No, reversal of interest may not take place.
Unreal.
That is one thing. In cash credit account, that's a peculiarity.
Yes.
Because in cash credit account, if there are enough of credits basically to meet the debit of interest, you need not reverse the interest basically. So, but the account will become NP.
Correct. There's a general requirement from the audience on restructured advances. Can I ask Pankaj to speak about it?
Yeah, see, restructured advances, I think briefly we discussed. The important point about the restructuring advances is that now, first is that as per the COVID circular, some of the accounts, like for example, if your COVID circular 1.0, which was issued in August 2020, and if there is some account which have been restructured, which is not an MSME account now, and it is not a personal loan account, belongs to a specific category. Now, if the account has been turned into an NPA, I'm just telling the important points. The account has to go back to the date of implementation of RP. The other important point is that there is significant, stringent condition for upgradation of the account. If the MSME account, which is less than 25 crore, this has to be treated differently as compared to the other accounts which are there. So one has to look at it, what is the nature of the account? One has to look at it, what is the reason, what is the condition for upgradation of these accounts. Like for example, normal situation, if the account has defaulted, a restructured account which has defaulted, normally we will give 90 days periods to, classify the account as an NPA in normal situation. In the case of restructured account, only 30 days period is given for regularization. If the 30 days period has not, the account has not come out of the default, this account will get classified as an NPA. An important point is that all these may not be automated. This will all depend upon the branch level, and that's where our role becomes an important as a statutory branch auditor. So that's.
And let me just follow this up with one priceless question. Can the auditor independently take a report of restructured advances at the branch? To the best of my understanding, no. Is there in one of those, you have those 365-day folders which are getting created? This particular item does not come in that folder when I last saw it. So today you're relying entirely on the bank manager to specify what is a restructured account. Is the audience understanding correct, or?
Yeah, I mean, see, you can look at two ways. One, look at the reports which are, which has come from the system and backtest to the documents. The documents also will, if you're reviewing certain files and if you find that these are restructured accounts, you can go back and look at whether this is appearing in the list also or not. So that way you can, ensure whether the list is complete or whether the list has been done. Second, important point is that all these restructured accounts get flagged in the Finacle system. Because at an overall level, at a branch level, I have to give a disclosure of the restructured account. So there is no way one person can just sit and consolidate all the restructured account. It has to come from the system. And all these accounts get flagged in the, in the Finacle as a restructured account. Because as I said, the condition will be different. The condition for upgradation, the condition for downgradation will be different. So 100% it has to be flagged in the system.
Because I don't think there is a report which is available where I can take restructured accounts at a branch level. And I think if you're talking about a risk of material misstatement, these are accounts which are obviously something that an auditor has to handle more cautiously.
Absolutely.
So maybe the CSAs should start circulating this. And Chopraji, I don't see too much interaction. Do you think this audit process would itself be better if the branch auditors get more data, on focus accounts? And surely in this day and age, it's not very difficult.
No, I can only tell you, because whatever Pankaj was talking, that makes a lot of sense. All restructured accounts are captured in the data. It cannot be without data. Let's be clear, because there is a different kind of provisioning required against that. Let's be clear on that, so far as that part is concerned. And the other thing is, now the Reserve Bank of India has brought out some kind of new norms which are very critical to be followed in case of the restructured accounts. And if I don't have the details of the restructured accounts and the upgradation thereof, one of the issues which will always form a part of my audit program is whether any account has been upgraded at any point of time, whether it is restructured or non-restructured. And I have to get into the reasons of that upgraded account, so far as that part is concerned. Now, if there is a restructured account which has been upgraded after the specified period, I have to make sure, as per the RBI norms, whether this satisfies the RBI norms or not. Earlier, what used to happen? One facility NPA, all facilities NPA, no issue so far as that part was concerned. Now they say that even if the facility which had become NPA, you have regularized that facility, that cannot mean that all facilities would become performing, including the facility which you have regularized, unless you make sure that all the overdues in all other accounts are also actually paid off. Similarly, in the restructured account, what they have done now is, so far as the RBI is concerned, that if in a restructured account, there is an overdue during the specified period of 1 year, even for 1 day, even if the account has been overdue by 1 day, in that particular case, the account cannot be upgraded. Now, this is very critical, very frankly. In the case of MSMEs, this particular period of overdue has been extended to 30 days. That just, if in the case of MSME, this period is 30 days, no issue. But after that, the account can be. But beyond 30 days, if it is, in that case, the account will not be upgraded. So in the case of restructured accounts, I have to be far more careful, because a lot of misstatements can take place so far as that part is concerned. Suppose I ignore this 1 day concept, and I should make sure that the system takes care of it also. That system does not allow a restructured account to be upgraded if there has been an overdue period, even of a single day. And what now, I think the Reserve Bank of India has been making the life difficult for the banks as well as the auditors. Now, earlier the overdue was that today it has become due, next day it will become overdue. Now they say when you take the, you run it for the day-end operation, the moment you have done the day-end operation, on that particular moment it has become overdue. So I think in this system, I have to be very, very careful as to what I am actually looking at. So I think the restructured account is one area which has been a critical area. Look at the DCCO's date of commencement of the commercial operations, the way this was being manipulated by the people. And this is one area where all manual intervention takes place. And I think this is something which we need to be very, very careful about. We have given a date of commencement of commercial operation, and you have actually not been following it. I have gone through some of the cases where the DCCO had been delayed by 4 years, 5 years, 3 years, and people had not been classifying it as NPA. Now I have to look at it, whether the system takes care of it, and still there is a manual intervention. If there is a manual intervention, then the audit log should be able to take care of that. Audit log must have the details of that manual intervention on a particular date on which this manual intervention has taken place. I think we have lived in a particular system. We are changing over to a particular system, but this system is far more critical today. It's far more better. There's no doubt about it. But I can say one thing with all authenticity. Today also, lot many things do happen which should not happen at the branch level, very frankly, and for which the auditors will have to be extraordinarily careful.
Yes, sir.
If I can just add on what Pankaj has said on
please do, sir. Please do.
Restructuring. So apart from relying on whatever the input which or the report which the bank has generated, see what probably the auditor could also do is, because restructuring involves two things. One, either in the reduction in rate of interest or elongation of my repayment schedule. So I think even if, let us say, the something which has got missed to be flagged in the system as a restructuring, if we have a report of instances wherever there has been a reduction in the rate of interest, it is not that all reduction will lead to restructuring, but that's a starting point to counter check whether there is a reduction which has and can compare it with the restructured list. Similarly, wherever there is a change in the repayment schedule or elongation of the repayment schedule, whether that is something which is in a case of restructuring. So if you have those two lists, that can also be independently checked with the list which is provided by the bank.
Okay. Thank you. Thank you so much. The next question I have is for Pankaj. How does the branch auditor prepare for a regulatory review or a supervision in the future? I mean, in terms of our working papers. That's the most important thing. No, it's like a thin coin. On one side you have diligence, and on the other side you have negligence, and the rim is the working paper. So how do we maintain good working papers?
So, as an auditor, first we need to understand that what to document and what not to document. As an auditor, we are very good in documenting as far as we have improved in terms of the appointment formalities, so on and so forth. But I think where we are lacking, or where the scope of improvement is there, on the type of audit procedure we have performed. I'm very happy that the CAQ has issued this Excel utility, which will serve as a base for a branch auditor, because if you look at that Excel utility, it has given a link to the guidance note also, which is very interesting thing to be done in that utility. Second point is that, what is the level of professional judgment we have used? Because every time, if you look at the AQR report of NFRA, it has been, the reports have been evaluated that whether the branch or whether the auditor has complied with the standard on auditing. And if you are complying with the standard on auditing, one thing which is very critical in the branch is that if you have classified an account as an NPA, the reason for classification, and if you have not classified account as an NPA, more reason to document is that why you have not classified that account as an NPA. Because that is a peculiar thing which gets picked up by the regulator and easy target for us. Second, wherever the judgments which have been used by the branch management or by the banks also, Like, for example, in many cases, when the branch is determining the security value, and if let's suppose I don't have the valuation report, they go by the balance sheet, they reduce a appropriate percentage of depreciation to arrive at the security value which is there. Now, this has been done by the branch to arrive at the security valuation. As an auditor, are we checking those parts? Are we okay with the depreciation rates which have been taken? Because tomorrow, in past, the RBI has come back and asked us that whether this security value which has been considered for the provisioning is right or wrong. That's the second aspect. The third aspect is that I would like to say is that how have you considered the internal audit report, concurrent audit report, and the other external report which is available? Because many a times what happens that we tend to go into an aspect which is already highlighted by the internal auditor and concurrent auditor. If we spend a good amount of time on analyzing these reports, it can serve a purpose. Other point is that how have you documented these aspects? Last point is that if you have given an MOC, like for example, one of the observation of the QRB I would like to place here. The QRB has said that the auditor in its report has written that there is a potential fraud in a particular account. However, during the review, there is no document which is available to support that claim. So whenever we are writing anything in our audit report, whenever we are writing anything in our LFAR, as has been told by Chopra sir and Khemani sir, we need to look into all these aspects, take the document together and move ahead. And the most important point which as an auditor we should be aware about is that the basic compliance of the standard auditing. I would like to quote the governor in one of the speech which he was giving at the National Academy of Accounts and Auditing, where he said that the independence of the auditor is far more important than any other thing. And how do we document this independence as an auditor? That is one of the critical aspects to be looked at it. And all the observation, one of the point which lacks from most of the branch auditor is that they don't have a consolidated list of issues which has been observed in a particular branch, so that I can say that these were the list of the issues which were there, out of which these are the issues which are resolved. These are the issues which have gone back to my LFAR or the audit report. If that all these factors are considered, I think we are well prepared for the review. However, the basic is follow SA 230, including top of these points, which I just spoke about.
Thanks. The next question is for Sanjay ji. One important question actually. What if the branch manager refuses to give a representation letter? In most cases, they don't, sir. I mean, and they say, okay, fine, we'll give it to you. And then I'm not so sure that all our auditors are getting it because there's no mandate. In fact, I know one particular bank which said it's not our policy to give this.
So that's something which is the requirement from our standard. So if the branch management do not issue the representation letter, which used to be the case maybe a few years back, but to my knowledge it is not there. But let us say theoretically, they refuse it to issue the management representation letter. Obviously, they are supposed to be bringing it to the notice of their controlling officials. And also, if the controlling office is unable to resolve that issue, then they obviously have to approach to the concerned statutory central auditor who will help them to resolve this issue. But without management representation letter, I don't think we can issue the audit report.
Okay.
But Sanjay ji,
Yes,
the
sir.
problem is that the central statutory auditors don't want to intervene in such matters. That's the problem. One may or may not agree to that, but that's the factual part of it. I think very few central auditors take the pain of actually resolving the issues which are being faced by the branch auditors. So my request to all the central statutory auditors that if at all management representation and engagement letter, no bank manager issues an engagement letter if you ask me. So I think it is for the central statutory auditors to make sure that these engagement letters are issued. So somewhere or the other, I think the central statutory auditors must also try to help out the branch auditors in certain matters wherever the problems are common to all the branch auditors. Or alternatively, then the branch auditor will have to qualify the report because this auditing standard could not be followed. because the management of the branch refused to give this management representation under SA 580 and so far as the engagement letter is concerned. I think why should the branch auditor feel shy of qualifying the reports in these cases? After all, this is not something which is saying that the account has become NP or something that sort. I think it is only saying that the engagement letter has not been given to us. The management representation has not been given to us. Let it be said by the branch auditors in their main report. And it should not be a part of the long form audit report. That I'm very clear. It has to be a part of the main audit report.
No, because we give an assertion in the main audit report, no, sir, that the audit has been carried out in accordance with the standard on audit. Obviously, it has to be part of the report.
Yeah.
Only one thing, Shripi, I would like to touch upon here is that, many a times it is what has happened that the institute has given a format of the MRL. Many branch auditor also tend to take many points from the LFAR and put it in the MRL.
Yeah.
I think we also should be very clear that on what matter we should be taking the representation and on what matter we should not be taking the representation. I mean, the representation cannot replace my audit procedure. I have to carry out the audit procedure. It should just support the...
Agreed. Absolutely.
If you look at the representation letter also, sir, it's a fairly boilerplate template. It says asset is all okay. That anyway he is signing.
Correct.
He's also signing the balance sheet. So he's... The context of a representation letter itself, I feel somewhere in the bank branch audit, it's and what is the representation for, sir? It is for my protection as an auditor. I mean, I'll have a separate offline discussion with Chopra ji on that, because that cannot, I don't know whether that will satisfy a assertion. I mean, that will tantamount to a qualification. So that's engagement. They're definitely procedural lapses. But I think, does it vitiate true and fair? I don't know, because he's also signing. But then we'll keep this, sir. In terms of
I can definitely, you see, in Companies Act today, look at 143.9 and 143.10. The way they say that standard auditing, these standards have to be followed. If you don't follow these standards for certain reasons, then what will you do? I think the report has to be qualified, because you could not follow a particular procedure. You could not follow a particular standard. So the report should be qualified. It may not affect your true and fair view. That's a different matter altogether. No, that's for then institute to provide the guidance. Sure. Whether it should become a matter of emphasis, or should it become a key audit matter, or should it become a qualification, or should it become only a disclosure? I think then it's for the institute. If you feel that the report need not be qualified because it does not impact my true and fair view, I think somewhere or the other, then it is for the institute to provide that guidance. Otherwise, in my perception, if 143.9 provides something which is a violation of law, I should qualify that report and can say that this is, or I should say, wherever I am saying that the audit has been carried out in consonance with the various standards on auditing being issued by the Institute of Chartered Accountants of India, I should say, except for these two. Except for these two. There I should say that, if I don't want to say it the other way around.
Sure, sir. Sure. Got it.
Oh, and representation also, Sri Priyaji's representation also cover that something which is there has already been covered. So if something which is not accounted, we will not know.
Correct.
That's what the representation says. Suppose there is a legal notice which has been received by the branch, let us say for
damage, anything.
Sorry?
Damages, any
for various damages, and has not been disclosed, and it has a material impact on the financials of the branch. Then the report itself will go to vitiated. No, I mean the true and fair view would get vitiated. So we don't know. The issue is, without that, we don't know whether whatever we are signing is complete or not.
Sure, sir. Sure. In terms of concluding remarks, could I just request a 2-minute concluding remark, and I'll start with Pankaj ji.
So, I think we have discussed more of the things. I would just like to summarize in this way that, just follow 5 to 6 principle, if you can, the branch auditor in bringing the quality. There has to be a clarity and quality in the reporting. Second, there has to be a timely communication with either with the branch management or with the central stat auditor or with the zonal offices also. Third, communicating the key issues. Many a times, some branch auditor would identify some issue, may not be material at his branch, but may be material at overall bank level. I think that should be highlighted well in advance as the early warnings to the central stat auditor, because it could have a material impact at a bank level. The other is that the professional judgment which is being used by the branch auditor. I mean, you cannot write in the LFAR that it has to be looked at the central office level, it has to be looked at the zonal office level, it has to be looked at with the central stat auditor. The other aspect, professional skepticism, and last aspect is that remain relevant and updated. Many a times we go back to the branches with the old circular, with the old informations which are there, and many a times we are not able to, prove our point to that say. So, these are the points which one can look at it. And last point which I would like to say is that once we have taken the assignment, let's deliver the quality without getting into here and there. That's all from my side.
Yes. The next I'd like to invite Sanjay Kimani ji.
So I fully agree with what Pankaj has just mentioned. Okay, I mean, while he has covered everything, few other things I think more from our own perspective, I think we need to be following essays in toto, particularly when it comes to the documenting our planning document, then identifying the risk or the, let us say, the ROM, then how we have determined the materiality, then in terms of taking it logically from the materiality, which are the high risk, low risk area basis that how we have done the sampling, then in terms of evidence gathering, what we have done. Okay, and then obviously based on all these procedures, we are supposed to be preparing our opinion and then reporting on that. So I think while from the client's perspective, we are supposed to be doing what we are supposed to be doing, but at the same time, I think audit quality from our own perspective should ensure that we remain fully compliant with all the essays and we document that, and also fully remain compliant with the SQC1. I think that's something which we need to follow in total without exception.
Sure. May I now invite Vishal ji to speak a few words, after which we'll conclude with a short conclusion from the man we started with, Amarjit sir. And
yeah, sure. Thanks, Shripriya ji. And I would just like to sum up with a couple of statements. One is that, as auditors, we need to follow one principle, and when it comes to quality, when it comes to documentation, and which I share with everybody, is that whatever is not documented is equal to not done. Now, I think this is one principle, one fundamental, and I would request everybody who is practicing to put it up in your offices, wherever you have your team, that it should be there throughout, 24/7. It should be knocking their mind that whatever is not documented is equal to not done. And therefore, because many times we've seen, and not just bank branch audits, in other audits also, that queries are raised, but then how they are resolved, how they are closed, that is never documented. It might be in soft copy, it might be in a hard copy by way of notes. And so, if as an auditor, we don't even write the way in which that query has been closed, it is as good as that the query has not been resolved. I believe this is one of the primary aspects. And we had an excellent session. I know people, the audience, are wanting this to go on and on, but I would say that things have to come to an end. But I would just request a couple of things, that as part of these quality cafe sessions, presently we have lined up, we have the last Saturday of every month, one quality cafe session, which is on the quality aspects with respect to audits into various aspects that we cover. And second is that I would also request all the participants to follow us on our Twitter handle, which we have, that is at CAQICI, to please follow this, because we would come out with regular updates and highlights of what we do. And last but not the least, Pankaj Bhai, Sanjay Bhai, and Chopra sir also mentioned, I would request as part of the technical literature, please keep the guidance note on audits of bank, the 2023 edition, the latest one, because this gets updated, revised every year. And I would request as part of your initial toolkit to please keep this 2023 edition handy. Thank you to all the participants, all the experts for their time. Thanks, Shripriya ji, and back to you.
So thank you very, very much. And another aspect, a small aspect, but an important one. I think we should just be fearless when we do these bank audits. You don't have to feel bad about doing something good, which is possibly an aggressive audit this time. So, and there are also efforts from the ICI side to see if we can collect the total value of MOCs that we have passed as a community this time, and maybe that will help us to strengthen our case on why branch audits will continue to be very, very relevant in the context of a good India of good governance. So with these few words, I'd like to thank each one of the participants here in this program. We've taken a few questions, especially those which were not covered by the speakers, and the others we've taken the liberty of not considering due to paucity of time. But thank you very, very much once again, and look forward to meeting up on other Polity Cafes with all of you. And thank you once again to the panelists. And thanks, Ruchika. Thank you.
Thank you.
Thanks, everyone.
Yes, sir.
Yeah, with the permission, we can have a couple of minutes. Ruchika, if you can just share that utility for the benefit of members, and because that utility can be downloaded from our CAQ website. So since we have 3 minutes to 1 o'clock, I thought let me utilize this time.
So can you share this? See this on the screen? Yeah. So this utility has been prepared to help the members conducting bank branch with respect to audit procedures and documenting the audit procedures. So as our respected speakers, panelists have already told that we have a plan in place. What we have done within these 26 sheets which we have made for the individual heads, we have plotted the reference to the various, to the guidance note on audit of banks issued by the AASB and the technical guide in one Excel sheet, so that you do this procedure, then map it with the working reference, you make your comment. It has a dashboard which highlights the comments, the adverse comments you must have made while conducting the audits. So it will help you while entailing the LFAR and the drawing the main audit report. One more sheet which talks about the essay compliance, as we have been talking and deliberating in today's session also. It entails the various standards of audit and the compliance you have done. So as what Vishal sir and the panelists believe that whatever we do has to be documented. So it's surely a step in that direction to improvise what we have done and document. And at the end, of course, the professional skepticism, the individual audit plan, which is going to be, not static, but dynamic. So what we have done to cater to that also is that we have made it flexible to an extent that while we say we have 20 checks under the cash, you can add more fields of the audit procedures which you have conducted at the particular branch. And that also get mapped to the dashboard. So if I add something in the cash, which is more than the 20 checks I have built in here. So if we go to the dashboard, it will count to 21. And once I fill in the complete, it will take in the basic formula also. 470 checks in all for a bank branch audit with the guidance audit procedures detailed in the guidance note 23 and LFAR, the CAQ, and we feel that it's going to be really helpful. But of course, we are open to comments, suggestions for improvising it further in the next year, which are welcome at our email ID, caq@ici.in.
Yeah, so Ruchika, you can also share the drop-down and how it would look. And I would just like to add that this also becomes a very important monitoring mechanism of the work that the team members would be conducting, because many times we've seen audit firms having more than one branches. And for the partner or the team leader, this becomes a very important tool also. So not just a checklist like Ruchika mentioned, that these are the minimum activities that are expected to be done in each of these sections. And broadly, like Chopra sir also mentioned, that LFIR is the main aspect in the audit, and this majority of these checkpoints are with respect to LFIR. And this drop down, so yeah, Ruchika, you can take it that it becomes a tool for monitoring also. And,
so we have 6 drop down options. So if we say that, the query has been raised by my end and it's still with the branch manager to come back to. So if you go to the dashboard and see, it will depict that, there has been 1 query raised. So the engagement partner, the engagement lead has a control over the bank branch in terms of what activities the team has conducted. Of course, at the end, we have made a provision to, have it reviewed and prepared by whom the individual team member can be designated for individual sheets. And it also talks about the engagement team details also in the first sheet after the cover that you can add to, because you can then report it accordingly, that how much time was actually given by various team member, what was the variation that can also add to the AQMM parameter which we have. So 6 drop downs in the dashboard, which will all come onto the dashboard, the main sheet here.
Yeah.
And this all will come even if you add more, procedures under either of the sheets, 26 sheets which we have made.
Yeah, so to download this, I would request members just to Google CAQ ICI, and on the homepage of the CAQ, on the right side, you have this link which takes you to the form where you give your details, and you can then download this and save this file onto your computer for use. So thanks once again to all the participants, the experts, Chopra sir, Pankaj ji, Sanjay ji, the deputy convener, Sri Priya ji, Ruchika, and the whole office for this wonderful session and the excellent utility that we have come out at the CA. Thank you. Thanks, everybody. Have a great weekend ahead.
Thank you. Thanks, everyone.
Thank you.
Thank you, sir.
Thank you.